Hey everyone, it's Dave Santarelli. Many of you know me from my live trading sessions every day on YouTube. You know I trade live, give my analysis and tips to everyone who's watching, and of course, many of you are some of the members here from BreakingChartAlerts.com. I realize that many of you, like me, have questions about what you can claim on your taxes as a trader, as an investor, so we invited our CPA to offer his knowledge to all of you. Now, I know many of you didn't go through $17 million worth of transactions like I did last year, but Ed Milford's our CPA and he could really help you guys out. I'm going to turn it over to Ed Milford. When I had tax questions, I found him here in Orlando, but then I found out he has clients all over the country. He's my CPA. He has been, and I'm sure he'll tell you about his backstory and everything. But I'm very happy to have him on my team here. He's helped me out quite a bit here. So he's going to give you guys a lot of information. So I hope you guys take notes. If you guys have any questions, you guys could ask questions in the YouTube live chat here, and then we'll answer those at the end. But it'll be nice to have the array there of questions to go over at the end. So stick around afterwards, and he's going to answer your questions for you. And if you have any questions for me, that'd be great as well. So right now, without further ado, I'm going to turn it over to Mr. Ed Milford, our CPA. Ed, I'm going to put you on presentation here and let you share your screen, okay?
Okay. Sounds like a plan. All right. So I think I am now the host, correct?
Not yet.
Oh, not yet. Okay.
Did you make yourself the host there, Ed?
Okay. No, not yet. Hold on a second. All right. Hold on a second. So I'm the host now? Okay, here we go. All right, perfect. All right. Give me a second. Let me get
There
this
we
up.
go.
Yep. All right. So, good day, all. Good Friday. So you individuals must be real troopers on a Friday. For those on the East Coast, it's 5 o'clock. In that traffic, it's amazing that you're on this call. So you must be really interested in taxes or learning more about trading or both of those. So let me get into the presentation and talk to you a little bit more about who I am. And thank you for joining us today and attending this tax and trading class or seminar. So I am Ed Milford. I am a certified public accountant. I'm not a trader, so don't ask me any trading questions. I'll leave those all for Dave to do. However, I do know a lot about taxes, and for what I don't know, I'm always good at researching them. So it is really my pleasure, opportunity to present to you a the tax requirements for operating what the IRS call a trading business, and we'll get into that in more detail. So there are several requirements that you'll need to satisfy to consider yourself a trader in securities or in a trading business as the IRS has defined it. But with a little bit of due diligence, some great documentation and effort, you can do that, or many of you will be able to do that. And we'll get into the details of that in a few minutes. Let me tell you a little bit about my firm and who I am. So I have worked nearly 40 years in business, in private industry, public accounting, supporting all types of businesses and organizations. I do have clients around the country. The bulk of them are in Orlando. But with technology today, I had a client as far as Australia. Now he's since moved to Orlando, so you can have clients all over with respect to the technology we have today. And we do taxes, we do tax planning, IRS resolutions if you run into any problems, bookkeeping, accounting, financial reporting, uh, all kinds of other great things, setting up your business if you're from the state of Florida. And then I help my clients with strategic planning, budgeting, and analysis. As I mentioned, I am a certified public accountant, but more importantly, I'm registered with the IRS to do as a tax professional. QuickBooks Pro Advisor, so I know bookkeeping and accounting as well, and I'm a notary in the state of Florida. I started my career with the largest accounting firm at the time, several years ago, a company called Arthur Anderson. Some of you probably read about them, but they were vindicated in the Supreme Court if you didn't know that. I spent 30 years with a Fortune 250 company called Avon Products. Probably many of you didn't know Avon Products. Ding Dong was a Fortune 250 company. When I was there, we split our stock three times. So, and I had some options, so we did pretty well. I was the controller of our $2 billion business in North America. So strong career in corporations, in corporate America, and in public accounting. I am on some boards, a couple of boards. I have a lot of professional organizations I'm a member of. You can read that. And by the way, you will get this as material in a handout for attending. So you can keep this as good bedtime reading. If you need to fall asleep, just read my bio here. So let's talk about trading in securities from an IRS perspective. So that's how the IRS refers to it, trading in securities. And so what does that mean? Well, what that means is, and the best way to define trading in security is define what it's not. And what it's not is those individuals who are investors like myself. So what I do is I invest. Why do I invest? I invest to make money. So what does an investor do? We're in it to generate appreciation in our capital, in our wealth. We want dividends. We want interest income to live off of. If you're retired. So when we're holding these items as personal investments, that's the key, personal investments. And we're holding them for a substantial period of time. So we're not turning them over within a 31-day period or a 30-day period, which is very important. Just keep that in mind, and we'll talk more about that in a minute. And we are not a trade or a business. So we're not in this to trade. And so if you're an investor, you're not a trader in security, a trader in security. And by the way, if you have gains and losses, you report those on Schedule D. If you're in trader in security, you're going to report those on Schedule C. Now, many of you say, what the heck are those schedules? Now, for those of you who know a little bit about taxes and tax returns, you know what I'm talking about. For those of you who don't, you can ask your tax person what those are, or you can ask me, and I'll explain it to you. But a Schedule D is where you report gains and losses if you're an investor. Now, what if you're a dealer in securities? Well, if you're a dealer in securities, you're not a trader in securities. And what are you doing? You're looking to run a business or an entity, which specifically is regularly purchasing and selling securities for their customers, for their clients, and selling them to their clients. So they are in business. They are a trade or business as defined by the IRS. And they're handling all of the different transactions, communications, basically for their clients and for themselves. So if you fit into any one of these two definitions, you're not a trader in securities. So forget about the tax benefits of being a trader in security. But don't threat. There are things you can do to move into that next category. So let's talk about them. What's a trader in securities? Well, this is a business or an individual who are buying and selling securities for their own benefit in their own account. According to the law, they're considered a business if other requirements are met. So what are those other requirements? Well, you're not maintaining an inventory of securities, right? And you don't have customers. One criteria. You're engaging in this and you meet the following conditions. Okay, you're seeking a profit on the securities you sell at a specific price. You're not looking for dividends, interest, or capital growth or appreciation in capital. So your activities are substantial. So you're doing a lot of trading, a lot of activity going on, just like Dave's doing. And I'm sure Dave's told you about it. And you're carrying on this activity. You're not stopping and starting. right? You're not taking off a month, taking off a week, taking off a couple of days even. What you're doing is you're on a continuous, constant, working, regular basis doing trading. So these three things, if you can start checking these three boxes, you begin to get closer to the IRS requirement of a trader in security. By the way, and we'll talk about this on the next slide, I believe. So the IRS, as many codes and documentations and conditions and rules and regulate, they don't have a box you can check and say, hey, I'm a trader in security. They just that box just don't exist. They don't have that box. So the way you do it is through your facts and your circumstances, what you do and what you don't do, and how you document that in the case you get audited. So all the documentation you do in any tax situation, in any of your businesses, primarily is in case you get audited. Now, if you're in business, you want to know if you're making profit, not making profit, those sorts of things. That's very important as well. But really, you want to make sure that in the case you get audited, you can have the appropriate documentation, facts, and circumstances to support your situation. If you don't have that, then obviously there are consequences for not satisfying those requirements. So what do you need to do? What is the IRS looking for? So what the IRS is looking for is this holding period, less than 30 days. So always think less than 30 days. So you want to buy those securities and sell them within that 30-day window. Check mark number one. The frequency and dollar amount of the trade during the year is important. So that has to be substantial. You have to have, and I'll give you some numbers as we get into the second part of my presentation. So hold that thought. You're looking to produce income, right, for your livelihood. Now, that doesn't mean you can't do this as a part-time job. You can do this part-time and still become a trader in securities. Not a problem at all. You can do that, but you have to have the appropriate documentation to support that. So you can't, I talked about stopping and starting. Well, you've got to be devoted to this. You have to spend the time and devote a certain amount of time to it. So Ed, what is that? We'll get there. I'm going to tell you what that is so you can start to think about how you document that. And I give some suggestions to it. In fact, I've done a lot of reading on this topic. And as you know, I support Dave on, but not a lot of them talk about how you document things. And I believe in setting up logs. Logs can be manual, logs can be on computers, but you need to keep track of how much time you're sitting there. Now, a lot of that gets registered on your transactions. It gives you the date, time, you do all that. So that's the other way you satisfy that requirement. So doing that, get that check mark. So the nature of trading activities, right? If it doesn't fit into these requirements, then at the end of the day, you're going to be considered an investor and not a trader. And then all those tax benefits you thought you had, you no longer have. So I know you're saying, well, Ed, you never told me about the tax benefits. We're getting there, so hold on to it. It's coming right up. But first, we got to talk about the qualifications. So what are the qualifications to get the trader tax status or TTS tax status? And these are great benefits if you can get this status. So, and as I mentioned, there's no IRS test. There's no box to check with the IRS. So the first thing you got to talk about or you got to do here is you got to do it for a period of time, right? The trader has to be more than a year. Now, by the way, you can be part-time, you can be full-time, you can start mid-year. As long as you satisfy some of the requirements, you can become a trader in security and get those TTS, trader tax status, those benefits. And by the way, you can be a trader in security 1 year and not the next. Now, obviously, if you want to maintain those tax benefits, what you want to do is have that consistency from year to year. But there's no requirement to have that consistency from year to year. As I mentioned, it can be have part-time, but you got to still satisfy the condition. Well, there's this section called 475, and I'm not going to bore you with 475, but really it's an election you make to be a business, And that's different than trying to make an election to be a trader. Okay. So first you're a trader, then you make the election as a business. And by the way, you can wrap your trader in security in a business, very similar to the way Dave has done it. So you can do that and get great benefits of doing that. Now, there are legal rulings, court decisions that you could lean to that support your tax status and the tax break you're looking to take. A couple of those, and I'm not sure if they're in here, but one of them is Popey is one court decision. Another one is Edicott, which is another court decision. So, and if you have a good CPA who understands the trader and security business and tax rulings, they'll know this. If they don't, you can always find someone who will. Okay. And then, here's the key thing in terms of making sure you get all the check marks to meet IRS requirements. So I always believe in going by best practices, and there are a lot of great best practices that are out there. And one of them is maintaining good books and records, learning from the experience of previous individuals who have the experience in preparing tax returns for traders. And there are some great CPAs that are out there. In fact, at the end of this, you can see one of my sources is one of those individuals or one of those companies. So I always like to give credit where individuals have done research, and I've leveraged and used some of that research. So let's get into the detail of it. So Ed, you said there are requirements. Well, there are. So hours, how many hours a day do you need to spend? Well, you need to be spending 4 to 6 hours per day. 4 you can probably get away with. I like to stretch it to 6 to meet one of the requirements of being active and doing this on a regular continuous basis. And I would say if you do 4 to 6 hours, 4 days a week, check mark, you meet the requirement. But here's the great
about that too. Just to
go ahead, chop in. Yeah, absolutely.
It says including the trading activities. That includes research and analysis too, right? That's not just trading,
absolutely,
right?
Absolutely.
So, we take an hour, 2 hours every day just to analyze trades, just to find trades, do our screeners. All that counts.
Yep, absolutely. I'm glad. And please interrupt, Dave. If you see something you want to add to it, please do that. That's great. But you're absolutely right. All of your administrative, your research, your accounting you may have to do. And accounting is just not accounting for accountants, but you keeping your record keeping that all straight. If you have to travel to meetings, if you're paying dues to a well-known organization, such as the one hosting this, those are tax deductions you can take. Now, be careful. Don't use these automated systems to do your trading. That won't count. So that's a no-no, and we'll talk about that in a second. I mentioned you got to be consistent with this. So you really got to spend 75 of the available trading days. So how many trading days are there in a year when you start backing out holidays and so forth? About what, 250 or so trading days? 220. There you go. Dave just gave you the number. So 75% of that number, boom, you got to hit it. You have to hit that number. So keep track of that. No interruption in your activity. You have to be consistent and substantial in terms of the amount of time you're putting into this. So volume. So 4 trades, and again, Dave's going to know this a lot better than me, how you guys meet this, but 4 trades per day, 15 per week, 60 per month, 720. Bam. Those are the numbers you have to hit. More than that, fantastic. It's just casing gravy on top of the turkey or chicken, whatever you like to eat there. But you got to hit this volume criteria. So this is your checklist. So you check this stuff off. If you're hitting it, you're getting closer to a trader in security. I talked about avoiding those automated trading. That's apparently a no-no to do that. Substantial proceeds in the millions. You know, Dave just talked about what his volume is. So you have to be up there. I'll share some more numbers with you in a second on that. The holding period, 31 days or less. I like to use 30 days. It's just, you know, a little bit more conservative. And then a patent day trader with you need to have 25,000 in a security in your account. Again, Dave's more of an expert on that. I'm just giving you the numbers you have to hit. And then you have to I always recommend setting up a business, a formal business with a formal name that you can use. So whatever state you're in, you register with that state to set up your business. You give whatever name it is. You get your EIN for that business, and that just helps make your business more legitimate, by the way. And from a tax perspective, we're going to get into a lot of the tax savings in a minute. But you know, when you're buying equipment, your different monitors and devices and your computers and your trading platforms, all of that shows that you're in business to trade, right? To be a active trader in security. When you don't have that, then again, your argument is a little less substantial for you. Okay. So, trader security. What are the tax benefits? The tax breaks. So TTS, again, trader tax status. Once you get that status, there are several tax benefits. This is the tip of the iceberg. So, I mean, there's a laundry list of what these could be. So first of all, let's say you have a loss. If you had a loss in your business and you met all the requirements I talked about, guess what? That's a loss you can take as a deduction. And if the loss hits certain thresholds, you carry it over to the next year. The net operating loss carry forward. And that's all within Section 475. 475 dictates what a trade or business can do and can deduct. So great opportunity. So there are other business deductions and breaks. So if your business is operated out of your home, you have an opportunity from a home office deduction. Now, that office has to be used regularly and exclusively in your business. In other words, you can't be sitting there doing other activities in your office. It has to be related to your business. Internet service, telephone, supplies, account fees, travel, legal, accounting, tax preparation, margin interest. The list is much longer than this. This is the tip of the iceberg, but this all becomes deductions for you in your business. Okay, but you got to hit that status. So there's a section 179 that talks about equipment. So all that, by the way, many of you may not realize this, but with the tax laws changing in 2018, there are huge write-offs you can take for the purchase of equipment in your business. So things like that are one-time write-offs that you can just take and get that tax benefit early. I'm a big believer in trying to take the tax benefit early versus, you know what, I'll take it in a couple of, because you don't know if the tax law is going to change in a couple of years. So take it as soon as you can. That's my perspective. Now, S Corp status. So many of you may not understand or realize the benefit of being an S Corp. Well, one of the things the S Corp allows you to do, you now have 100 shares of stock in your S Corp that you can sell to others. But that's not the real benefit. The real benefit is that it gives you some other, I mean, that is a benefit, but the real benefit, you now have employee benefits you can take, because now you can put yourself as an employee on your own business and pay yourself a salary. And by the way, that salary you pay yourself is tax deductible if you're an S Corp. If you have health care insurance premium, tax deductible in an S Corp. You can set up a simple employee pension plan or SEP, 401k plan, all under S Corp structure and you get the tax deductions related to that. Now, there are some requirements you need to meet to be an S corp, and I'm not going to. That's a different tax class than this one, and you have to meet those requirements. So now, keep in mind, some of the tax benefits with an S corp is very similar to an LLC, limited liability company. And what this does, it gives you asset protection. So for whatever reason, someone sues you in your or sues your business, your assets are limited to what's in your business, and that's all what this is talking about. By the way, C corps don't qualified for. You can't wrap that around a business in trade or in securities. You can't quite do that. But limited life company is one, or limited life corporation. You may hear it's or a small corporation. So if you are an LLC right now, you say, "Oh, Ed, I want to." You can't give yourself a salary. You can't pay yourself if you're a straight LLC. You have to be an S corp. And to become an S corp, there's a simple form you fill out to get that designation. But if you've not sent that form in within 70 days of creating your LLC, you need to have a reason. A good CPA has the reason for you. So if you need a good reason, I have that reason. Okay. Record keeping. Record keeping is absolutely paramount, critical. It's just critical for just regular taxes. If you're in your business, whether or not you're in trading in securities, bookkeeping is paramount. You have to do good bookkeeping, good record keeping. It starts with a separate business bank account. Keep your personal from your business. It starts with a good bookkeeping system. Bookkeeping system could be on paper, but keep in mind, if you get audited, you need to be able to produce this very quickly and send it to the IRS. So you don't want to spend time at a fax machine or a copier. What you want to be able to do is set up a bookkeeping system. QuickBooks, from my perspective, is the best way to go. Many of you can do it on your own. If not, there are great companies out there that do great bookkeeping for you, and they do it at a reasonable, affordable rate. So keep your receipts. So if you are spending money on all these things I talked about earlier, you still need receipts or evidence that you spent the money on that particular transaction. It has to be a bona fide and legitimate arm's length transaction. The way you do it is with business credit card statements, bank statements, and receipts. Now, you don't have to be crazy. You don't have to keep receipts at the $2, $1. I like a nice threshold of $50. Okay. Everything else, as long as it's going on a business bank statement or business credit card, you're fine. Now, if you are an S corp, establish that formal payroll system. In fact, if you are an S corp, you do have to pay yourself. The IRS requires you to set up payroll. But you can. Here's the other beautiful thing about an S corp. So you can take money out of that business two ways. Unlike an LLC, you can only take it out one way. Two ways. One way is through a distribution. As long as your distribution isn't draining your capital, and as long as it's not excessive, you can take a distribution. Now, a distribution, hey, what's a distribution? You just write out a check for yourself, but they should be regular distributions. It's not taxed, nor is it a deduction. As a salary, though, but you can then take a salary, and your salary has to be reasonable as well. And that is a deduction in your business. So set that up. Make sure who's ever doing your payroll, they're filing your taxes properly and on time, and handling all of that. Now, set up your trading account or trading accounts should be different from your personal investment trading account. So you want to have those activities separated as well. And then in terms of just forms and documents you file, if you become an S corp, it's something called 1120S you have to file. A K1 flows onto your personal tax return, and you get taxed through your personal tax return. S corps are not taxed. LLCs are not taxed under normal circumstances. There are situations where they can be taxed. Again, that's another tax class. And then LLC or sole proprietors, and then there's some timing. If you are an S corp, don't miss March 15th. You miss that deadline, you get penalized $200 per month per penalty for every month your return is late. So you don't want to do that. So wrapping it all up. So Ed, what are the net takeaways? What are the noteworthy points we want to talk about? So capitalize on the tax benefits. How do you do that? Set up an S corp or LLC. S corp gives you some better tax treatment. Maintain good books and records. Can't get around that. Separate those business and bank account activities. I'm a believer in tracking your time, and there are a lot of great tools out there to do that. Otherwise, what you're left with is recreating that by looking at dates, times in which you did your trading. I just, it's easier. Hey, I logged in on this time. I did my research from this time. I did this. That's all you need to do, and just keep it. It can be a manual log or it can be on the computer. File the appropriate tax return. I've seen so many tax returns in my day where people have filed the wrong tax return. Not a good thing to do. It just creates more of a hassle for you with the IRS. So by the way, if you are a single member LLC and you are considered a trader in security, you file Schedule C. Otherwise, if you're an S corp, you're going to file the 1120S, and a K1 is going to flow to your personal tax return. So, and then consult with your seasoned tax professional, someone who knows the tax law. So you got to start with someone who knows the tax law, and then secondarily, someone who knows taxes from a trader in security perspective. So here's a little bit of a checklist. Achieve the hours. Make it consistent and frequent. No interruptions in your activity. So don't take off a month, don't take off a few days, don't do that. Hit the volume targets. Have substantial proceeds. And again, Dave can help you with some of the numbers in which he's doing and what may make sense for your business. Maintain that holding period of less than 30 days. I have 31 days here, but obviously some months there are 31 days. Get that 25K in that PDT account. I believe in setting up a formal business to do that. And then look to make money, look to get those tax breaks. That's really the way to do it. So, I have a team of people that support me. I'm not going to spend a lot of time talking about that, but I'm at the center. I'm the CPA. I have another CPA on my team, and then a lot of great tax professionals and bookkeeping professionals. Here's my contact information. Again, you'll get a handout. And I do want to send out to Robert Green, CPA. A lot of the information, he's great. If you haven't seen some of his work on the internet, give a shout out to him. A lot of great information as well. And really want you guys to go out there, make money, and hopefully get that TTS designation and trade and security designation. So Dave, I am going to turn it back over to you. I'm going to stop my sharing here, and I am going to make you the host again.
Great.
The host with the most.
Great presentation, Ed. That was awesome.
Thank you. Thank you.
Ed, we got a couple of questions,
Okay. Let me go to the chat, look, see what we got. All right. If you want to read them to me, I'll answer them as best I can.
Sure. There's one. Bruce says, "Can you talk about paying quarterly estimated taxes on stocks? Do you know anything about that?"
Okay. So when we say quarterly estimated taxes, what we're referring to is as an individual or even as a business, or even as what we call a independent contractor, or in many cases a 1099 miscellaneous recipient, you should be making quarterly estimated tax payments. So whether you're selling securities, so now if you're selling securities in your trade or business, the problem you run into if you're trading in securities is you've got these ups and downs. So sometimes you're making money, sometimes you're not making money. At the end, the goal is to make money. And if you're making money, you're going to pay taxes in that period of time. So in that situation, what you may want to do is kind of average out your peaks and valleys and determine what, if you're making money that year, what that income is. And then once you know what that quarterly income is, then you should know what your tax status is. And your tax status is dictated by many cases, whether you're married, you're single, if you are married, are you filing separately? Well, that throws you into a different tax bracket. Do you have dependents? Well, if you have dependents, then that's perhaps going to throw you into a different, because that can be a deduction for you. That can be a credit for you, depending upon your child, how old they are, and whether they're in college or not in college. But what ends up happening is if you're making money, that if you're not having taxes withheld, like if you work for someone from your pay, you should make quarterly estimated tax payments. So one of the things I do for my clients who have their own businesses, whether they're traders in security or not, I look at on a quarterly basis how they're doing. And if they're making money, then I do a quarterly estimated tax analysis for them. And I make a suggestion and recommendation how much money they should pay to Uncle Sam as far as their tax bill goes. So then at the end of the year, when you file your tax return, you look at those estimated tax payments, you include them on your tax return. And then when you do that final tax return, which is nothing more than a reconciliation, it'll determine whether you owe money or you're getting money back. But you should be, whether you're trading securities in the form of a trader in securities, look at the flow and smooth out those peaks and valleys to determine what your quarterly estimated tax payment could be. So hopefully that answered that question. I know it was a long answer.
That was a great answer, Ed. Thank you.
Okay.
So one of our members actually has a question too. So he said that you talked about consistency, not taking off a few days or a few weeks. He said, but what about vacations? Are you allowed to take like a vacation per year with your family? Is that okay with the IRS?
Oh, absolutely. Absolutely. You can take a vacation. So, and what I was really referring to, it's not so much taking off a week, 2 weeks for a vacation. And you can do that a couple of times during the year. That's fine. What I'm referring to is, let's say you take a month off. You start, you know what, I'm sick and tired of this, trading stuff. And then take a month off, or, take 3 or 4 weeks off and then start back up. Then take 3 or 4 weeks off and start back up. That's the consistency of starting and stopping. And really, you really don't want to do that. That's what I'm really referring to. So go ahead, take that vacation with the family a couple of times a year. Just don't start and stop for a couple of weeks or a few days and then start back up.
Awesome. And he has a follow-up on that. So the quarterly estimated taxes you were talking about, right? So if we're a trader, obviously we don't know what we're going to make over the next few months, right? So how do we know what the different amounts are per quarter if we're not sure what we're going to be making next quarter? That's a great question.
Yeah, no, that's a great question. So what I should have said and should have added to it, you're looking at cutoffs. So you're looking at cutoffs, calendar cutoffs. So your first, so in there four quarters in a quarter. Yeah, now, Ed, sure, Ed. Yeah, you're a good mathematician. So in a year, right, 12 months, and the way the IRS breaks off these quarterly estimated tax payments, they're due the next month at the end of a quarter. So your quarterly estimated tax payment for the first quarter is going to be April 15th. That's going to be your first. So you should know in that quarter how well you did. Did you make money? Did you lose money? But here's what I was referring to in terms of the peaks and valley. Let's say you lost money that first quarter, but second quarter, you made a lot of money. What I like to say is, you know what? I look at those 2 quarters, I average them out, and maybe that's what I'm going to base my second quarterly tax payment on. Not that big second quarter that I made $2 million in. I'm not going to throw a 25% tax rate on that and pay $250,000 in a quarterly estimated taxes when I lost $1 million in the first quarter. I'm going to average that out. Oh, it's $1 million. But I'm also going to be thinking about the third quarter as well. So that's what I mean about averaging them out.
Perfect. There's a few more questions on there. If you wanna, do you want me to read them to you, or do you wanna?
Yeah, I don't see them. I just see
Oh,
it because I only see your group
okay.
chat.
Let me put them out here for you. I'll pop out the chat here.
Okay, perfect.
Alrighty. Okay, there we go. Now you can see the questions right here on the YouTube chat, right?
You know what? I cannot because I'm in the. Let
Oh,
me.
let me share my screen here. That'd help too.
Yeah,
There
yeah,
we
that's
go.
probably.
I could be the presenter again. There we go.
Oh, there we go. Now we go. All right. So, all right, we got a lot. Okay, so what do we got here? Let me see. All right. What was the last one you read?
Okay, so last one I read was kind of jumped through, but we could start off with Abu Young here.
Okay, Mr. Young, Mr. Young. Okay, so trading, I don't reach the 25,000 threshold. Oh, let me move myself out the way here. Okay, so let's see. I don't meet the 25,000. Oh, hold on a second. Oh, 25,000 threshold. I still qualify. No, you got to hit all those thresholds I laid out. Unfortunately, you got to hit them all to be safe.
He's talking about the $25,000 minimum to be considered a pattern day trader.
Yeah, that's one of the requirements.
Yeah.
That's one of the things you got to hit. Yeah, yeah. And there's, the things I laid out there, you got to hit those. If you go above them, great. If you're short of them, you bring in risk, and guess what? You may go the rest of your life below those targets, never get audited. Great, but that one time you get audited, it's really painful. So you don't want to do that. Okay. If I make 200 million trade stock, I can't get to TI. Also, you get say you must be trading frequently. So can I take? Oh, okay, that one we already hit the. How do you register? So you don't register to be a trader to get the trader tax status. There's no checkbox. You have to say to yourself, did I meet those requirements? So my checklist at the end is it could be helpful. And then once you meet those requirements, then you file your tax return basically claiming to be a trader in security. And you have the backup to prove it. So you really, if we can use the register word, you register when you file your tax return. So you don't send something into the IRS or to anyone saying that
Great
this is
info.
what you are. Okay. Um, okay. Let's see. Is there a minimum balance on an S corp trading account? No. I mean the minimums that I mentioned doesn't apply to being the S corp is just your tax entity structure. So you could be an LLC, you can be a sole proprietor, but you get more benefits when you're an S corp. But there's from a trading account perspective, um, you know, there isn't a minimum as it relates to being an S corp. Okay, estimated taxes. We talked about that. You really got to look at those peaks and valleys. Um, and quite frankly, I mean, you've got to use. And I understand it's hard when you're talking about trading. And again, as I said, I'm not a trader, but I see the peaks and valleys that happen. So you really have to, and this is where it's important to have a person, a good tax accountant, someone you can bounce things off of. Hey, listen, I just finished this quarter. Hey man, I slammed it. I made 5 million this quarter. Do I need to be quoting the estimated taxes on the 5 million? Well, we got to start exploring what we think is happening the rest of the year. And this is where you guys should be doing your research, your homework, all that stuff to understand what's going on globally that could affect the market, that could affect your trades and so on and so forth. So you need to look at those things to get a better idea how you think the rest of the year is going to the worst thing you really want to do, in my opinion, is give our U.S. Treasury Department. By the way, you don't give the IRS your money; you're giving it to the U.S. Treasury Department, and they're sitting on it. And the worst thing you want to do is just have a great quarter, pay all these taxes, and have them hold on to it, and then your next quarter isn't as good, and then they're not giving you that money back. That money's gone. Okay, let's see a couple more we can go through here.
They love to spend it, don't they?
Yeah. Oh, dude, tell me about. Look what's going on right now. Right? They bail out anyone. They're going to bail us out too, right?
Yeah.
Oh. All right. Can we just file the end of the year instead of the? Well, you can do that. The only risk So the only risk you run. So that's a good question. Someone asked the question, can you file at the end of the year, not make these quarterly estimated tax payments? You can. The issue you run into is if you have a big tax nugget at the end of the year, you will get.
That's like something like me that I had. I had that issue.
Exactly. So it's one of these things you got to play. Really, those first 3 quarters are going to be the critical quarters because you can always make up in the last quarter of the year as well. So keep that in mind. A lot of questions on the quarter. I think I've answered most of the quarterly estimated tax. Okay, trading from my LLC. Okay, I'm not sure if I meet the trading status, but I'm able to deduct broker's fee. Well, yeah, I don't know about if you don't meet the status. Now, so when you talk about broker's fee, if you're considered an investor, there are still certain investment expenses you can take, but that's limited to your investing activities and gains and losses. And you have to take those when you're filing that Schedule D tax return. And if it exceeds that, then you got to try to throw them on the itemized. So you really don't want to do that. Just become an S corp. My perspective is if you're meeting certain requirements, might as well be an S corp, get the greater tax benefits. So let's see what else. Can you do an S corp and roll an IRA? No, you can't roll your IRA into your S corp. So that you gotta. So if you set up an IRA, I'm not sure why you would want to roll it into your S corp. Now you can set up the S corp and then create an IRA or what we call a SEP plan in your S corp. But you can't have the IRA and then bring it into your S corp and get the tax deduction. Don't quite work that way. So I think I answered that question. And then again, you don't register for the TTS. And I think that's it. It looks like I got them all, Dave, for the most part. Now, if I didn't answer your question, or if you have more questions, again, you have my email. Feel free to send me an email, and just give me a day or two to get back to you.
That sounds good, Ed. That was a great class.
Great. Thank you for giving me the opportunity to talk about taxes and trading. And
Ed, I'm already getting phone calls here. People are asking about setting this up. So if you want, I'm going to send out your information to them, and if they need anything, I'd be glad
to. We can set up. I offer a free consultation of an hour, and we can get them on my schedule, and we can talk more about how I can assist you.
Perfect. Sounds good.
Thanks
a lot for your help tonight, Ed. You've been a big help for me, and I appreciate everything you've done for me. So.
Yeah, well, you're welcome, and thanks for having me as your CPA.
All righty. Thank you, Ed. Have
All right.
Good night.
You too. Enjoy your Fridays. Take care. Bye-bye.
Take care. Bye-bye. Alrighty, guys. So that's going to conclude that class there. Sorry about that. When I switched screens there, I didn't notice that the volume went off there. So sorry about that. But this is all recorded on Zoom here. So the edited version is going to be up online and on YouTube once we get finished here. So hope everyone has a great week. If you guys have any other questions, please let us know. Shoot us an email, support@breakingchartalerts.com. Or you guys could shoot us a message on our inbox here, right here on Facebook. If you guys go to breakingchartalerts.com and log into Messenger, you guys could shoot us messages, and we could give you our accountant's information if you'd like. But great class tonight, Ed. I appreciate everything you've done for me as a trader operator and as running my business as well here. You've been critical to our success, and I really appreciate it. So I hope everyone has a great night, and God bless, and have a good weekend, team. Take care. And I'll see you guys on Monday. No problem, John. Thanks, guys. Have a good weekend. Take care. Stay safe out there. Good night, guys. Let's see. Dume, I will send you that information, okay? If you just shoot us a message. Shoot us a message on Facebook Messenger here if you guys have questions or need Ed's information, or you guys could just rewind this video as well and see his information, or you could shoot us a message on Messenger. But take care, guys. Have a great weekend, and I'll see you guys on Monday. Let's kick some butt next week. Elections are coming up. I'm expecting this market volatility to remain, so you could easily get in those trades that he's talking about, 4 trades a day, 30 trades a week, very easily with this volatility we're seeing. And they could be a combination of day trades, swing trades, anything like that. And that's the whole consistency with how we trade at Breaking Chart Alerts. We're usually in and out of trades less than 30 days. So, that really qualifies us for everything we need, as long as everything else is met, like Ed went over there. So, that's the one benefit at breakingchartalerts.com. Our trades are usually less than 30 days out till Expo. We're making frequent trades, day trades, swing trades, overnight trades. So feel free to message us if you're interested in joining our service, breakingchartalerts.com. Or if you guys are interested, you could also click join now, and you guys can check out the different types of plans that we have as well here. If you go down to membership pricing plans, and you guys could check that out. $125 a month, that's for the morning trade session. $250 a month, that's for the morning session, the 9:30 to 11, and then the 2 to 4 p.m. And that includes the text alerts and also access to our trade challenge and trade room and our app, BCA Trading app, which you guys could download on the App Store. The Elite Pro Trader, you're going to save $500 per year, plus you're also going to get additional classes. And once you log in, all of our classes and lessons are uploaded to our website, and you'll have access to those as well. So I hope everyone has a great weekend, and stay safe, and I will see you guys on Monday. If you guys need anything from me, you guys have my contact info, and you guys could feel free to shoot us a message on Facebook as well. So take care, guys, and have a good weekend, and I'll see you on Monday. Good night, guys.